In this video, we're going to look at the use of debits and credits in double entry accounting. Double entry accounting is an accounting system we use to record transactions. We record at least two effects on the accounting equation, and we use the terms debit and credit. Firstly, let us revisit the accounting equation and the balance sheet. Here's the accounting equation. Assets equals to liabilities plus owner's equity. And we remember, the accounting equation must always be balanced. Here's an example of the balance sheet. On the left, we have the assets, and on the right, we have liabilities plus owner's equity. We can also see that on the left, the total assets equal to the total equities on the right. Note that the equities are made up of liabilities, which are obligations to external parties of the business, and owner's equity, which are obligations to the internal parties of the business. Before we proceed any further, it's important to remember this rule: debits to the left and credits to the right. Watch this hit song on YouTube to help you remember this. Keeping in mind debits to the left and credits to the right, we'll now look at the balance sheet to establish the debit or credit nature of the accounting elements. On the left of the balance sheet, we have current assets and non-current assets. Since debits are to the left, all assets have a debit nature. On the right-hand side of the balance sheet, we have current liabilities and non-current liabilities. Since credits are to the right, all liabilities have a credit nature. On the right-hand side of the balance sheet, we also have the owner's equity. And since it's on the right and credits are to the right, we can establish that the owner's equity also has a credit nature. However, it is important to note that the owner's equity is made up of a few components. Firstly, capital. Secondly, drawings. And lastly, net profit, which can be further broken down into revenue and expense. To establish the debit or credit nature of the capital, drawings, revenue, and expense accounts, we need to look at their relationship with the owner's equity. First, let us take a look at capital. Capital has a positive relationship to owner's equity. For example, whenever capital increases, owner's equity also increases. Therefore, capital shares the same credit nature as the owner's equity. Drawings, on the other hand, has a negative relationship to the owner's equity. For example, when drawings increase, owner's equity decreases. Therefore, drawings has the opposite nature to the owner's equity, that is, a debit. Revenue has a positive relationship with the owner's equity. For example, when revenues increase, profits increase, and therefore owner's equity also increases. On this basis, revenue shares the same credit nature as owner's equity. Lastly, expense. Expense has a negative relationship to the owner's equity. For example, when expenses increase, profits decrease, and owner's equity decreases. On this basis, expense has the opposite nature to the owner's equity, that is, a debit. Here's the full picture of the debit and credit nature of all the accounting elements using the balance sheet as a guide. Here are some tips to help us remember the debit or credit nature of the accounting elements. Firstly, remember the rule: debit to the left, credit to the right. Since assets are on the left of the balance sheet, assets will have a debit nature. Liabilities are on the right of the balance sheet and therefore will have a credit nature. The D in debit represents drawings, which has a debit nature, and the E in debit represents expenses, which also has a debit nature. The C in credit represents capital, which has a credit nature, and the R in credit represents revenue, which also has a credit nature. We're now going to look at the basics of recording using general journals. We will be looking at the E.N.E method, elements plus nature plus effects. The use of double entry system also means the use of general journals to record the double entries. Here's an example of how the general journal looks like. We have the dates, the details, followed by the debit amounts and the credit amounts. Notice here how the debit is on the left and credit is on the right. We will look at some examples of how we record in the general journals shortly. Let's start off with what we already know. In accounting units 1 and 2, we have learned how to analyze the effects on the accounting equation. We have used the terms increase and decrease. How does this all link to double entry accounting? Now let's look at the balance sheet again. Remember, debit to the left and credit to the right. Here we can see that all assets have a debit nature. Whenever there's an increase in assets, we say debit asset. And whenever there's a decrease in asset, we credit the asset. On the other hand, we can see that liabilities have a credit nature. Whenever there's an increase in liabilities, we credit the liability account. And whenever there's a decrease in liability, we debit the liability account. In summary, accounts with a debit nature will have increases recorded on the debit side and decreases recorded on the credit side, whereas accounts with a credit nature will have increases recorded on the credit side and decreases recorded on the debit side. We will now look at an example of how we can use the E.N.E method to help us record a transaction in the general journals. E.N.E represents element, nature, and effect. Here's the first example. On July 1, the owner contributed $10,000 capital to the business. Under assets, the bank has increased by $10,000, and under owner's equity, the capital has increased by $10,000. Using E.N.E, we can analyze that the bank is an asset, and that's identifying the element. The nature of the bank account, which is an asset, is a debit, and the effect was an increase to the bank account, which is an asset. Putting all this together, an increase to an asset which has a debit nature means that we can say debit to the bank for the amount $10,000. On the other hand, the capital is an owner's equity. And as we have learned earlier, capital has a positive relationship to the owner's equity. Therefore, the nature of the capital account is a credit. The effect was an increase to the capital account. Putting all this together, an increase to the capital, which has a credit nature, means we can say that there was a credit to the capital for the amount $10,000. In the general journals, we start off by recording the date, which was the 1st of July. Under details, we record the accounts that have been affected, in this case, the bank and the capital account. Using E.N.E, we have established that the bank is an asset, which has a debit nature, and there was an increase to the bank account. Therefore, we know that the amount needs to be recorded on the debit side, which is marked here with the little star. The capital is an owner's equity account, which has a credit nature and had an increase, and therefore the amount will need to be recorded on the credit side, marked here with a star. The last and final step is to put in the amounts that represent the effects. And here, there was a debit of $10,000 to the bank account and a credit of $10,000 to the capital account. To check that we have the transaction recorded correctly, we need to make sure that all the amounts on the debit side equal to the amounts recorded on the credit side. Here's another example. On the 2nd of July, there was a cash purchase of inventory totaling to $6,050, including GST. Note, the GST is calculated by taking $6,050 divided by 11 to give us a GST amount of $550. Under assets, we recognize that the bank has decreased by $6,050. This represents the total amount that was paid for the purchase of inventory. Also under assets, the inventory has increased by $5,500. This is the costs of the inventory purchased, excluding GST. Under liabilities, we recognize that the GST clearing, which is typically a payable to the ATO, has decreased by $550. Here's an additional note about the GST clearing. Often, GST is payable to the ATO. That is why we are classifying GST clearing under liabilities by default. As a GST on purchase is refundable from the ATO, that is why the GST on this inventory purchase reduces the GST liability. Now let us have a look at the E.N.E analysis of this transaction here. Under assets, the bank is recognized as an asset, which has a debit nature. Since there was a decrease to the bank, therefore we credit the bank for the amount $6,050. Also under assets, inventory is recognized as an asset, which has a debit nature. Since there was an increase to the inventory, therefore we debit the inventory by the amount of $5,500. Under liabilities, we recognize GST clearing as a liability, which has a credit nature. Since there was a decrease to the GST clearing, therefore we debit the GST clearing for the amount of $550. Now let us record this transaction in the general journal, starting with the date, which is the 2nd of July. Under details, we record all the accounts that have been affected by this transaction. We have the bank, inventory, and GST clearing. We have established using E.N.E that the bank is an asset that has a debit nature, and it has decreased. Therefore, the amount will be recorded on the credit side. The inventory is an asset with a debit nature, and it has increased. Therefore, the amount will be recorded on the debit side. Lastly, GST clearing has been identified as a liability, which has a credit nature, and it has decreased. Therefore, the amount will be recorded on the debit side. Lastly, we input the dollar amounts, starting with the bank, which has been credited for the amount $6,050. The inventory has been debited by $5,500, and the GST clearing has been debited by $550. Here are a couple of handy tips to help you check that the general journal entry is correct. Tip number 1. Note that the GST will always be on the same side as the purchase or the sale. And tip number 2. Check that the total amount on the debit side equal to the total amount on the credit side.